Hey everybody, welcome back to another dividend investing video. I continue to be blown away by the power of dividend growth investing, and as we wrap up the year 2022, it definitely feels like the holidays have come a little early for dividend investors. So many amazing companies have announced dividend raises in the last few days, many of which I own either in our public account or in one of my other accounts. Times like these solidify my choice to primarily focus on dividend growth investing, and I want to quickly highlight 10 of the companies that just announced dividend raises that I think are worth looking at. I'm Nick, and this is the Dividend Growth Income Channel. Thank you for joining me today. I'm not a financial advisor, just a guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could do me a favor, and please smash that like button and subscribe to keep up with future videos. This helps us out more than you could imagine in bringing you quality dividend investing content. Now, these are not by recommendations because we all have different objectives and are at different points in our investing career. But these are stocks that I either hold myself or would be willing to hold as a long-term dividend growth investor. I'm not going to highlight anything I wouldn't willingly own myself. These are companies that have the track record to back it up, and perhaps they deserve more due diligence and a spot on your watch list. Not going to go into a lot of detail with these, but I will be making some videos highlighting some of these individually over the next few weeks. Let me know if there's ones in particular that you are interested in. So let's get to it. 10 dividend stocks that just gave shareholders a bump, and please leave a comment down below with any of these that you own and which ones you don't but would like to own. Stock number 1, Waste Management, ticker WM. Waste Management is a Texas-based company that provides waste and environmental services in North America. On December 8th, 2022, Waste Management announced a 7.7% increase to their annual dividend from $2.60 to $2.80. In addition, they announced a $1.5 billion share repurchase authorization. With this, we have 18 years of dividend growth and 22 years without a reduction. That 7.7% raise is right in line with its 5-year annual average of 7%. And the dividend is yielding near 1.7%, and this is about 9% lower than its 5-year average of 1.85. This dividend is paid out quarterly in the months of March, June, September, and December. As of the March 2023 payment, it's going to be at 70 cents per quarter. The dividend well covered, taking up 47% of forward earnings and 53% of forward free cash flow. Waste Management is trading in the mid to high 160s and is up about 2.5%. Year to date, it's trading at a PE of 27.9, which is just a bump higher than its 5-year average of 26.3. Waste Management typically trades at a premium, almost never at a discount, but this is a high-quality company. To me, this is one of those plays you want no matter the state of the economy, as we can't avoid the need for their services. So this strikes me as a good idea for a recession, and we hold Waste Management in our public portfolio here on the channel. Stock number 2, CubeSmart, ticker CUBE. CubeSmart is a self-administered, self-managed real estate company focused on self-storage facilities. They are the 4th largest self-storage company in the United States with nearly 1,300 properties. On December 7th, 2022, CubeSmart announced a 14% raise to its quarterly common dividend from 43 cents to 49 cents per quarter. This marks the 13th consecutive year of dividend growth with a 5-year average annual growth rate of 10%. Cube is yielding over 4.5% right now, and this is 15% higher than its 5-year average. The quarterly dividend is paid in the months of January, April, July, and October in the amount of 49 cents per share for a total annual payout of $1.96. The dividend makes up 78% of adjusted funds from operations, and we like to see this below 90% in REITs, so no concerns here. CubeSmart is trading in the low 40s and is down over 20% over 2022, so plenty of room for recovery. And CubeSmart is trading at a price to adjusted funds from operations at 17.1. And this is about a 14% discount to its 5-year average of 19.9. I love the self-storage model, especially in the time of rising rents and housing costs. With Cube, you're getting a healthy dividend yield over 4.5% with double-digit dividend growth that looks sustainable. And being the 4th largest player in this industry, I see some room to grow. There's lots to like here, and I buy and hold this one in my own Roth IRA. Stock number 3, Pfizer, ticker PFE. Pfizer is an American multinational pharmaceutical and biotech company headquartered in New York City. On December 9th, 2022, Pfizer announced a 2.5% dividend raise, increasing its quarterly payment from 40 cents to 41 cents. This marks the 12th consecutive dividend increase, although the 2.5% raise is a bit modest compared to its 5-year average of 5%. Pfizer is yielding about 3.2%, sitting about 14% below its 5-year average of 3.7%. Quarterly dividends paid out in the months of March, June, September, and December in the amount of 41 cents per share for an annual payout of $1.64. The dividend takes up 33% of earnings and 38% of forward free cash flow, so these numbers look fine. There's nothing concerning there. Pfizer currently trading in the low 50s, down almost 9% year to date. Pfizer is trading at a PE of 10.5, which is 16% below its 5-year average of 12.5. This is not the sexiest dividend stock, but they are a giant in their business, no doubt. It's trading at a 10 PE. Overall, I think it's a solid pick for the healthcare industry, but keep in mind they did cut their dividend in the last recession. Stock number 4 is Abbott Laboratories, ticker ABT. Abbott Laboratories is an American multinational medical device and healthcare company based out of Illinois. On December 9th, 2022, Abbott announced an 8.5% boost to its quarterly dividend payout for the year 2023. The payout is now 51 cents up from 47 cents. This marks the 51st consecutive dividend raise from Abbott Labs. They are dividend king, raising that dividend at an annual rate of over 12% over the last 5 years. The dip in that chart is when AbbVie was spun off from Abbott Labs. Now, ABT is yielding 1.9%, making it available at a yield that is 18% above its 5-year average. The quarterly dividend is paid in the months of February, May, August, November in the amount of 51 cents per share for an annual payout of $2.04. Abbott can easily afford this dividend payment as it makes up 50% of forward earnings and 39% of forward free cash flow. Abbott is trading around 107 and is down more than 20% in the year 2022, putting it in a nice position for a recovery in the coming years. Abbott is trading at a PE of 26.1, which is nearly in line with its historical average. This one trades at somewhat of a premium. I think Abbott is a compelling pick in the medical device business with double-digit dividend growth. It's often overlooked by its more popular cousin, AbbVie, which was spun off in 2013, but don't sleep on Abbott Labs. Stock number 5, Broadcom, ticker AVGO. Broadcom is an American designer, developer, manufacturer, and supplier of semiconductor and software products in the data center, networking, software, broadband, wireless, storage, and industrial markets. On December 8th, 2022, Broadcom announced a 12.2% raise to its quarterly dividend, up from $4.10 to $4.60 per share. This makes the 13th consecutive year of dividend raises by Broadcom. They have been raising this dividend at one of the fastest rates in the industry, averaging 29% over the last 5 years annually. Broadcom is yielding about 3.4% at the time of publishing, which is right in line with its 5-year historical norm. The quarterly dividend is paid out in the months of March, June, September, and December in the amount of $4.60 per share for a total annual payout of $18.40. Their dividend looks easily covered, making up 45% of forward earnings and 42% of forward free cash flow. Broadcom is trading in the mid-500s, but don't let that deter you from investing in this company. It's down 18% in the last year, and the share price says little to nothing about how cheap or expensive a company is. Most brokerages offer fractional shares, and I buy fractional shares of this one in our public portfolio here on the channel. As far as how Broadcom's value today, it's trading at a PE of 13.6, which is right in line with its usual. We highlighted this company back in the beginning of November as a quality company available at a discount. Several weeks later, it's not quite at that same discount, but perhaps more in the territory of reasonably valued. Stock number 6, Zoetis, ticker ZTS. Zoetis is an American pharmaceutical company focused on medicine and vaccination for pets and livestock, headquartered in New Jersey. They were spun off from Pfizer in 2012. On December 8th, 2022, Zoetis announced a 15% increase to its quarterly dividend payment, up from 32.5 cents to 37.5 cents quarterly. This marks the 9th year of consecutive dividend growth, and they've been doing that at an average rate of 21% per year over the last 5 years. Now, this isn't one for current income. It's yielding at right around that 1% mark. But note that this is 64% above its 5-year average. Zoetis is paying its quarterly dividend in the months of March, June, September, and December at 37.5 cents per quarter for an annual payout of $1.50. There's no reason to be concerned with the ability to pay their dividend, as it makes up 29% of forward earnings and 46% of forward free cash flow. Zoetis is trading in the mid-150s and is down almost 35% in the year 2022. For the valuation, it's sitting at a PE of 29.4, pricey but about 11% below its 5-year average, so this one typically trades rich. As an animal lover myself, I can't help but find myself wanting to invest in a company like this. But again, remember, you don't buy this one for current income. This is for folks who want to live on dividends maybe 10, 20 years down the line. This is more of a growth stock that pays a small but growing dividend, and that has a place for my own purposes. Stock number 7, Bristol Myers Squibb, ticker BMY. Bristol Myers Squibb is an American multinational pharmaceutical company headquartered in New York City. On December 8, 2022, Bristol Myers announced a 5.6% increase to its quarterly dividend payment, up from 54 cents to 57 cents. This marks the 16th year of consecutive dividend growth, and this latest increase is in line with what it typically does given the 6% annual growth rate over the last 5 years. Bristol Myers is yielding about 2.9%, and this is pretty much in line with its 5-year average. BMY pays out that quarterly dividend in the months of February, May, August, November, with a quarterly payment of 57 cents, making the annual payout $2.28. The dividend takes up 29% of forward earnings and 36% of forward free cash flow, so it checks the payout ratio boxes nicely. Year to date, Bristol Myers is actually up over 25% and is trading in the high 70s. And Bristol Myers is also trading at a PE that is right in line with its 5-year average at 10.1. So everything with this one kind of looks to be in line with usual, suggesting it's probably reasonably valued. And it's one of those companies that is actually up over the last year during this bear market. So I don't own this one at this time, but I admire the company and I do follow it closely. Stock number 8, American Tower Corporation, ticker AMT. AMT is a real estate investment trust. They operate and own wireless and broadcast communications infrastructure all across the globe. On December 8, 2022, AMT announced a 6.1% increase from its dividend, up from $1.47 per share to $1.56 per share. The one unique thing about AMT is they are raising this dividend every single quarter. It's pretty remarkable. We have 9 years of consecutive dividend growth with an average annual growth rate of 15%. The dividend yield is approaching 3%, and it's almost 50% above its 5-year average, looking quite compelling from that standpoint. The dividend is paid quarterly in the months of January, April, July, and October in the amount of $1.56 per share for an annual payout of $6.24. Seeing that growing payment each quarter has me asking myself why I don't own this one. The dividend payment makes up 61% of forward adjusted funds from operations, and we're good as long as this number is below 90% for REITs. AMT is down 25% over 2022, trading in the mid to low 210s, and the price to adjusted funds from operations is 20.8, which is about a 20% discount off its 5-year average. I think for 2023, I'm going to be adding one of the cell tower REITs to my Roth IRA, and it's either going to be American Tower or Crown Castle, which is another one we've talked about before. Stock number 9, Deere Co, ticker DE. Deere Co are known for their John Deere tractors. They're headquartered in Illinois. They operate mostly in the agricultural industry. On December 7th, the iconic tractor maker announced a 6.2% dividend raise, and this was the second raise of the year. It looks like during the pandemic, John Deere kept its dividend in line without a raise, so we're on the second consecutive year of an increase, but the dividend was not reduced and has been paid uninterrupted for 29 years. And they have an annual dividend growth rate of 13%. Now, Deere is yielding 1.1%, and this is about 27% below its 5-year historical norm. The payout schedule is February, May, August, November, with a quarterly dividend payment of $1.20, making an average annual payout of $4.80 per share. The dividend only takes up 70% of forward earnings, giving them plenty of room to continue growing this dividend. Now, Deere is trading in the mid 430s and is up almost 25% year to date. Another one that is doing quite well in the bear market. As for its valuation, this PE is trading right in line with this historical norm at 15.6. I find Deere to be one of the most compelling options we've discussed today in this video. With its conservative payout ratio, commitment to dividend growth, and healthy balance sheet, there's a lot to like for dividend investors here. Although maybe that 1% yield, this is more of a long-term play, perhaps not ideal for investors looking at current income. Stock number 10, finally, MasterCard, ticker MA. MasterCard Inc. is the second largest payment processing corporation worldwide, headquartered in Purchase, New York in Westchester County. On December 6, 2022, the credit card giant announced a 16% raise, marking its 11th consecutive annual increase. The dividend has been growing at an impressive rate of 18% annually over the last 5 years. This is another one that's more like a growth stock that pays a dividend. The dividend is yielding less than 1%. But at the moment, this dividend is 25% above its historical 5-year average. The quarterly dividend payment is made in the months of February, May, August, November for a payment of 57 cents every quarter for a total annual payout of $2.28. MasterCard's dividend payment only makes up 20% of forward earnings and 19% of forward free cash flow. So there's plenty of room to keep growing that dividend. MasterCard is trading right around $350 and is down almost 6% year to date for the year 2022. MasterCard is trading at a premium, as often quality companies like this do. Its PE is 30.3, and it's about 10% below its historical 5-year average of 33.3. But like I said, I consider this more like a growth stock. There's a tendency to lump companies like this into the financial sector, but it's part of the information technology sector. It's not a bank or a financial institution. It simply handles the transaction processing. Think of them as more of a gateway than a bank. Now, I do own its main competitor, Visa, which profiles very similar. Both are amongst the highest quality companies with low but safe growing dividends. I did own this at one time, but actually had to sell to settle my divorce a couple years ago, unfortunately. So like I said, this just feels like Christmas for dividend investors, with all these companies raising their dividend for the 2023 year. And I wish you a happy holidays, a Merry Christmas, a Happy Hanukkah, Merry Festivus, or whatever it is you happen to celebrate. I hope it's awesome. Thanks for sticking with us, folks. I will be having some time off from my 9 to 5 here at the end of the year, and I plan on putting out some more content, so do be on the lookout for that. If you'd like to see something more in depth on any of these companies, like a valuation on them, just let me know in the comments, and we'll try to put something together for you. Please check me out on Twitter at DivGrowthIncome, and let's connect. For full disclosure, I am long Waste Management, CubeSmart, and Broadcom. Thanks again. You guys are amazing. And until next time, keep investing.